the IPO market and any of the new companies, the hot new things, are always overpriced. We saw Warren Buffett take a big stake in ExxonMobil. I prefer other oils and I prefer the broad ETF, but ExxonMobil's trading at about 11 times. It's a 23% discount to the broad index. Its dividend yield is about 2.7%, significantly higher than the S&P. It tells, when you see Buffett making a $4 billion or so buy in a company like that, it's telling you he's having a hard time finding cheap stocks. Yes. And so you need to be cognizant of things never really got crazy cheap in the March '09 lows, but they were fairly reasonable. We're not crazy expensive here, but we're certainly elevated above historic means.
Yeah.
Let me interject one other related point. If my decision today was U.S. stocks versus 10-year treasuries versus T-bills, U.S. stocks are priced to give us a really crummy, long-term, forward-looking real return. 10-year treasuries are priced to give us something that rounds to zero as a real return. T-bills are priced to give us expropriation of wealth. Do I want a crummy return, no return, or expropriation? I'd probably take a crummy return. Fortunately, our opportunity set is far broader. And with that broader opportunity set, there are interesting bargains elsewhere. And that's what I find interesting.
Kimball, global value is what you're looking for. Barb was talking about bargains in Europe. Where do you see bargains?
Well, we're sort of, it's company by company, and we are still finding, we're still finding values in the U.S. and in Europe. I think the things that are on our minds with respect to the broader markets are, one, the fact that the rally in equities, and it's been global and it's been pretty synchronous across at least the developed world, haven't come with commensurate earnings growth. And so there's a little bit of a disconnect, and maybe the equity markets are discounting future earnings growth, but I think we're a little ahead of ourselves broadly. That's one issue. The other issue that's on our minds are profit margins. Profit margins, particularly in the U.S., but in the emerging world, and surprisingly so as well in Europe, are at elevated levels. And I think when you talk about broad market valuations, you have to sort of ask yourself whether or not these margin levels are sustainable, or whether they revert to more historical levels, which would be lower. And so those are sort of the two broad concerns that we have. As to whether we're in a bubble or we're sort of at excessive valuations, I don't really see that. We're still finding opportunities here and there. It's just gotten harder.